Recession is qualified by two successive quarters with negative gross domestic product growth. A reduction of at least 20% in the S&P 500 is also used as a barrier to mark recession. After last Friday, both of these criteria have been met. So what happens next? September has been a notorious horrible month for the stock market. Last Friday, the Dow Jones had a remarkable drop that had investors panicking. After dropping over 1,000 points, some very disturbing similarities to the 2008 crash had followed immediately. Many other past parallels to a time when the stock market crashed seem to be having or marking a sign of worse things to come. For instance, on September 29th, 2008, the entire world was completely shocked when the Dow Jones fell over 770 points, which at that time was a new all-time high. And the fears in the markets spread like wildfire. The Fed meets on September 21st this year, and how can the Fed control the economy? The only way they can do that is raising or lowering interest rates. That's one of their major tools. If the Federal Reserve prints money, that's good for the stock market. It's called easing. If the Federal Reserve does the opposite, though, it's called tightening or quantitative tightening, and that can be very bad for markets. So what happened in 2020? The Federal Reserve eased or loosened the current currency and began printing lots and lots of money. The crisis also accelerated the dilemma, the COVID crisis. If you take a look at the national debt, it has tripled in the last year and a half. Because of all the money printing, the Fed has no choice but to tighten its policies and cause a severe market correction. We're about to enter the 14th anniversary of the housing bubble of 2008, which crashed in September. We're now predicting a similar catastrophic event may happen very soon. Please see my other video on black swan events. Another bubble is about to burst, and we're going to see the housing market take a downturn, and it could be one of the most painful we've ever seen in the last 20 years. Experts argue that if the Federal Reserve actually were very, very hawkish at this point, they could maybe save the collapse of the real estate market. However, it's simply and super unlikely that Jerome Powell will hike rates, and he will not continue to stop at least until the middle of next year. At the Federal Reserve meeting at Jackson Hole, the economic symposium, the Fed shared that the path of reducing inflation would not be back quickly or easily. He added that the task requires tools that will be forceful enough to bring demand and supply into better balance. However, if we look at the 2-year bond over the history, we'll see that most likely he will have to pivot at some time next year. If he fails to restore the markets in an orderly way, we are headed for one of the biggest struggles like the 1970s or 80s, and another major collapse in all the markets. All right, the bad news gets worse. There's going to be an extremely bitter and cold winter for millions of people all over the world. The rest of our reserves is mainly gone, and energy consumption is rapidly accelerating and creating soaring prices and concerns about potential shortages if energy continues to cause anxiety for many families around the world. There will be widespread demonstrations and revolts. People will be forced to buy coal, which they already are, and firewood and other alternate heating sources ahead of this winter. We are approaching the hurricane season as well. So any disruption in supply chains regarding oil or refineries, remember they do shut down usually in September,